All right, so welcome back to Investor Den. We're here with my good friend Rishi, who's basically a funding guru. Rishi, we just met not too long ago. How long have we known each other now? A few months?
About 3 months.
About 3 months or so, right? And I mean, in that time, we've actually grown pretty close. I was looking for ways to get additional funding for my business and also for our investor community. And after talking to a lot of people, somehow I came across your company, and one thing led to another, and we started talking. And so, one of the biggest questions I get whenever I talk to anyone about all of our different investments opportunities and passive income and how to create wealth and generate wealth through passive income is, well, that sounds great and all, but what if I don't have the money to do it? And so, what do you say to someone that asks that question?
Well, there's a lot of paradigms about using your own hard-earned cash to invest into starting to make money, which is completely disbelief. So the way we tackle those paradigms is by introducing this creative financing called 0% capital. Essentially, you use other people's money to invest into cash flowing assets that is going to make you money eventually. So we're using banks' money at 0% to invest into assets that's going to produce you cash flow so that you can return the money to the banks on time without paying interest.
Yeah, I think you hit the nail right on the head there with the perception, and it's kind of, you have to have a shift in paradigm in the way people think. And a lot of it is stripping away these limiting beliefs, because sometimes instead of asking, how can I do something, most people just default to, well, I can't because of this, as opposed to thinking, well, how can I? And so, that's something that we talk a lot about in our investor community, is in order to be able to achieve your dreams, you have to expand your mindset.
Be open-minded.
And a lot of that has to do with, anytime your mind is expanding to new levels, it requires the evidence as proof to see that it could be real. Yeah. So one example, when you buy a car, all of a sudden you see that car everywhere because in your mind, now your mind sees it. Yeah. And same thing with problems or solutions. If you only focus on the problem, you don't see the solution. But if you start to look for solutions, which in your case, that's what you guys provide, is funding solutions to people. What would it look like for someone that has already gone through that process and they've said, okay, you know what, I'm ready to start looking for these solutions. Even though I may not have the money now, I'm going to go seek this funding, and they come to you. What does that process look like?
So first of all, when it comes to funding, a lot of things is related to risk. Not a lot of people are willing to take the risk in the beginning because they think that taking the loan from the bank is going to be risky. What if I'm not going to be able to pay it off? What if? There's a lot of what ifs. You have to be risky. You have to have the risk appetite to take that money and then invest into the right opportunities. Back to your question, how does someone get qualified for something like that? Obviously, you need to have a great credit score. Credit score is a foundation of acquiring a huge amount of capital, right? So what we do is we personally guarantee these type of funding based off of your credit score, and then we take your credit score and go approach the banks. And the way we do things differently is we work directly with underwriters, and we are able to get desired limit that we ask for, because we have built strong relation with the underwriters to get 5 to 10 times more limits than what banks can get you approved for. Because when you go actually walk into the banks, they will put you under a robotic approval, and then 9 times out of 10, you're not going to get the approval you're looking for, just because you have not optimized your credit, you don't have the right connections, you don't have the right mindset, you're just desperately applying for credit.
Yeah, and it's based on those relationships, but which I want to get into more detail, but let's back up a little bit and unpack that for a minute. So you said at the beginning, one of the things you need is the credit, right? And so do you guys help someone optimize their credit? And if so, typically what kind of credit score do you need, and so what is the lowest score? Like what's the typical profile of of your ideal client that comes into you, and then how do you take them from point A to point B with their credit scores?
Good question. So we can get someone started with a 680 credit score. Typically,
so someone that has decent credit, maybe they still have some debt, some leverage.
Exactly. Anybody that has negative items can be removed, can be disputed. We can get them prepared and qualified to get the funding, right? We have a credit repair agency that will remove all the negative items, optimize their credit, get their credit score above 750. That's a sweet spot. Ideally, I want to be able to get them above 800 so that we can hit that 5 to 10 times more limits to the banks. Underwriters likes to look at 820 credit score to get $50,000 to $100,000 with just one funding round. So ideally speaking, needs to have at least 750 credit score to start seeing the results.
So you help them get there. So you have all the systems in place. So you help them, clean up their credit, optimize their credit profile. So they go from that 650 that they had when they first came to you all the way up to 750 to 800, right?
Correct.
And I got to tell you, I mean, that's, I can attest to that, because when we came to you, we were at right around 660, 661, no derogatories, but we did have some inquiries. And a couple people we had talked to, they said that inquiries were impossible to remove. It was going to take months and months and months to remove. And because we had 6 inquiries in 2 years, so over the time span of 24 months, we had 2 inquiries. And obviously we're in the real estate business primarily, and so we refund properties, we're buying properties, so our credit's being pulled, constantly.
Yeah.
And that's how we operate, right? And so that's what these inquiries were for. And after we talked to about 2 or 3 people that told us that, anywhere from it could never be done to it might take 6 months to do, we came to you, and I don't know if you remember, I personally asked you, I think I must have asked like 5 times. I'm like, are you sure you can take away? Because I didn't believe you. And I'm like, listen, I have my own credit report. We came prepared. Remember, we had our own credit report. I didn't want another inquiry. I'm like, do not pull it. Go off of this. And you guys did that. And sure enough, you guys were able to remove it. And so, obviously without, giving us the secret sauce, I mean, what do you typically see in terms of timelines to remove inquiries and these derogatories? So from that 650 to 750 to 800, how much time normally goes by?
Good question. So to remove inquiry, if someone knows what they're doing, you can remove experienced inquiries in a matter of 24 to 48 hours with just following one script, right? And I gave that script to you, and you were able to remove that inquiry in 24 to 48 hours. Same thing with TransUnion. You can get that inquiry removed in 48 to 14 days, 48 hours to 14 days, because TransUnion specifically has some kind of logistics behind saying the right things and sending the letters to them. But Equifax takes a little longer, understandable, but someone who's quoting you 6 months, those are unreasonable timelines. Yeah. So back to your question, getting from 680 to 750, it's an easy process. At that point, if you have a 680 credit score, that means you have a little bit high utilization, and then you have few inquiries on the personal side. On the personal side, from, as you said, applying for real estate, applying for a car. Right, lenders do run your credit multiple times. Yeah. So it could take anywhere between few weeks, to a month to get to that stage.
Yeah, I think in our case we went from 661 to be exact, I think all the way to 810 in a matter of like 4 weeks.
Correct.
And you mentioned something else about the utilization, right? And again, I don't mind, sharing for our community, for our Investor Den community. Anybody that we bring into our community, I've already vetted. We don't talk to or recommend anyone that we haven't already experienced or gone through the process ourselves, because we take that very seriously. And so, in our case, we did have utilization. I think we were 30% or so of our credit limits. We were utilizing about 30% of that, so we did have some balances. And you guys completely surprised me. This part I wasn't expecting at all when you brought up the subject of basically giving us an unsecured bridge loan to consolidate, pay off all of our personal debt, so that then eventually once we got approved, we could transfer that over to our unsecured business debt.
Yeah.
So I was completely surprised by that. Can you talk a little bit about that? Because I mean, I thought that was just amazing.
Yeah. So I saw your guys' situation. I could see the potential in helping you guys out. And few pillars needed to be solved. First of all was removing negative items, optimizing the credit.
Yeah.
Second, the biggest pillar that a lot of funding companies overlook on is the utilization. And that's where we come into the picture, and we're providing lucrative solutions by providing the bridge loan to the clients so that they can significantly, aggressively pay off the debt on the personal side. Their credit score goes high, utilization goes down. And then now, at that point, your credit score will shoot up to 820, as you said.
Yeah, and I think that was the secret formula from going from 661 to 810 in almost like 3.5. It was under 4 weeks, and exactly. I was amazed by that. And you know, the other aspect of it is also the relationships that you guys have, like you were saying earlier, and I kind of wanted to come back to that because I really want to discuss that, because I think that's a big component. Yeah. Where and actually before we get into that, you know, once you have your personal profile optimized, then the other thing you do is that you look at the company profile.
Correct.
And you optimize that too. So before we even walk into the bank, which I'll still get into in a second, we'll keep everyone in suspense for a minute, but you know, I think this is important because, you know, we had, you know, I won't say the bank, but with one particular bank, we have about 7 or 8 different bank accounts with multiple 7 figures running through these accounts per year because of the nature of our business. And you know, we would have hard time getting funding from them, and we couldn't figure out why. You know, our credit was good, our track record with them was good. We've been with this bank since 1997, you know, almost 30 years now. And you know, personal accounts, business accounts, everything. And then every time we went in there, it was like, well, and we couldn't figure out why. And then you guys came in, and you realized it immediately. So, you know, maybe you can talk about that a little bit.
Of course. A lot of real estate investors don't know that their business, it lies on the riskier side when it comes to lending. So the banks will be conservative in lending to the real estate businesses because it's on the high risk category, right?
Because there's a code, right? Whenever you open a bank account, a business bank account, based on your interaction with the banker, the questions they ask you, they'll assign a code to your business.
Correct.
And some codes are considered riskier than others.
Correct.
Is that okay?
Yeah. So all the businesses are categorized as a specific code, and real estate is one of the riskiest category. So what I did for you guys is basically brought down the risk by categorizing your business with a low risk business, so that immediately when we categorize your business as a consulting business, for example, right, real estate consulting or any type of consulting business, that means the lenders are looking at you as if you are a consulting business. Right. That means there's more fundability for your business. You went from getting denied with the bank that you had relation with to now getting approved for hundreds of thousands of dollars in funding.
Yeah, and you know, I think it's important to point out that the way we did that is obviously, you know, legally and ethically, in the sense that it really was because, you know, we have a series of holding companies that actually have, so it goes back to the structure of your organization. So we have, you know, holding companies that actually take on the risk of holding the real estate. So the company that we were using for the lines of credit, it does not actually hold any real estate holdings whatsoever. And it basically does consult. On the other companies. So there is a way to do it properly. So that's part of the process. And so, I mean, the minute we made that one little change, you know,
right away,
the floodgates started to open. And then obviously you helped us with our PAYDEX score and everything like that. And so for those who don't know, can you talk a little bit about?
Sure, yeah. Besides optimizing the personal profile, we also focus on optimizing the business profile, because now the lending has been tightening up just because of the SVB situation, the Silicon Valley Bank situation. So the banks have started looking at the business credit. What exactly does the business, what type of credit does a business have, right? So we have ways and strategies to optimize your business credit and also help it report.
Right. So the PAYDEX is basically your company's credit score.
Exactly.
So like how you have your Equifax, TransUnion,
and
and
Experian.
Experian as an individual, as a person, your business has its own credit score, which is the PAYDEX score.
Not only it has PAYDEX score, but it also has Experian business, Equifax business. So we optimize all the 3 bureaus,
Right.
report trade lines to those bureaus so that they can establish a payment history.
Right.
The lenders only want to look at your payment history if you're able to pay down on the loans on time,
Right.
and that's the only thing that just makes it,
Right.
automatically helps you.
And what I think is really like one of the best parts about this is the fact that once you have everything under your business credit, it no longer appears on your personal credit, right? So you can have $200,000, $300,000 worth of unsecured lines of credit on your business, but if you go to apply for a mortgage, when the underwriter, when they pull your credit, you don't have all this debt.
It's not going to affect you.
It doesn't affect your debt to income ratio and your ability to qualify for that mortgage or for that car loan or for whatever else you're doing, because it now belongs to the business.
Exactly. Right? A lot of business owners still conduct business from the personal credit cards, from the personal cash.
Yeah.
And that's just the wrong way to do it, honestly, because it just jeopardizes your future about getting more funding, right? What I like to do is just point business owners in the right direction by letting them know that, hey, keep your business expenses on the business side. Don't ever utilize your personal credit cards because it's going to jeopardize your funding rounds. Yeah. Even if you max out your business credit cards or if you max out your business loans, it's never going to report on your personal side. Your credit score is still going to be preserved as if it's nothing happened. Right. If you go apply for a mortgage, you're instantly going to get approved for a mortgage.
Right, and that's exactly what we've seen in our situation. Once we hit 800, we've maintained 800 because we're no longer taking on any additional debt on the personal side. Everything's going through the business side. And something that I like even, on the subsequent, round 2 of the funding rounds, we went back and removed some of the inquiries from the first round so that we could go back and continue. So that's really amazing. And so, okay, so going back to, let's say, with regard to my investor den community or even your own clients in your network, now they have this capital. What do they do with it? Go on vacation? Maybe get a nice cruise? Do they, that trip to Europe they always wanted?
Of course.
Or so what do they do with this capital? What is the right thing to do with this capital?
Obviously, they can travel because when they spend money, they get travel rewards and stuff like that, which is a hidden benefit. But honestly, it's all about leveraging into the right opportunities that's going to yield you return on your investment, because it's not about making the money, it's all about making the return on your investment, right? So we have multiple opportunities where they can place their eggs into. One of them is real estate, fix and flip. Second one is Airbnb automation, where they make cash flow every single month. Third one is they can start lending out money, so they can become a hard money lender, investing into real estate projects, investing into debts, or any sort of projects that can make them return on their investment.
So, yeah, and basically now, essentially, you become the bank, because that's what the banks do. The banks borrow the money from you to lend it to someone else. Correct. And they make that interest. Correct. And now what we're doing is flipping that upside down. You're getting money from the bank at 0% introductory rate for a whole year. Yeah. So you're not paying any interest on it, but now you turn around, you can lend that money and make that interest yourself.
Exactly.
Or invest it in real estate or other assets, digital assets, luxury assets, which is something that we talk about in our Investor Den network. I mean, we have people in our network making 6 figures a month in Airbnb alone, luxury Airbnb. So, I mean, there's tons of opportunities out there. But like you said earlier, I think it's important to make that distinction between good debt and bad debt. Because, bad debt will sink the ship, right? So, the difference between bad debt and good debt is, with good debt, you have a plan in place. And what, again, going back to what I talk about in our community is just sort of, at the very, surface level, before we do anything, the first thing we look at whenever we look at an investment or taking on debt to leverage is, number one, what is the ROI? What is the return on that investment? And number two, which I think is just as important, sometimes people overlook this, is the time frame. In what time frame will I actually achieve this result, this return on investment? Because obviously you want to have a plan in place that if I'm going to put $1 in, I'm going to get $2 back in X time. And then that's how you're able to have that replicatable process where now you can then turn that $2 into 4, the 4 into 8, and then start beginning to have that compounding effect. And that's really how true wealth begins to be created.
Yeah.
And so you mentioned something with one of the strategies that you use with a specific type of life insurance policy that has some additional benefits to it. Can you talk a little bit about that? I saw that on one of your posts, and I think I picked up the phone and I called you specifically about that. I'm like, hey, can you explain that to me? Because this sounds interesting. I want to learn more about this. And we had that conversation a few weeks ago.
Of course.
So can you share a little bit about that?
Yeah. So my whole theory is obviously you want to become your own bank, but you become wealthy by keeping a lot of money you make, not making a lot of money, right? You want to preserve your wealth by keeping a lot of money you make. So for that, we have this vehicle where you dump all the returns that you make with these opportunities into an insurance policy. We're using this insurance policy as an investment vehicle. And then this insurance policy is structured in such a way that it yields 8 to 10% interest per year.
So you're basically making returns on your initial investment, and then you take that return, so that's already a gain, that's a return, you put it into an insurance policy, which then will still continue to get returns on top of your return.
Correct. And then not only that, but you also have the capabilities to borrow against your policy up to 100% at a 2 to 3% interest rate. So now you can actually unlimited, you can make money, you can dump money into an insurance policy, rinse and repeat, let that money grow, borrow against your policy 100% at a 2 to 3% interest rates, right? You're obviously beating the bank's interest rates. You can invest into real estate project, you can invest into anything that you desire to invest in, and you set your own terms of the loan.
Because now you're blending to yourself.
To yourself.
And because it's debt, I'm sure that the tax liability is offset significantly.
Your money grows tax-free, first of all.
Yeah.
And it grows stock market risk-free. So you're not bound by the stock market risk. So even if the stock market crashes, you still cap out at 0.25% gain on your entire cash value.
So that's sort of like a safety net there.
Exactly.
And what type of policy is this?
IUL, it's Index Universal Life Insurance Policy.
So, okay, so I mean, that right there is worth, the price of admission. I mean, that's a huge tip right there. Yeah. And so, it goes back to what we talked about, right? So the main points being that the first thing you got to do is really get your mindset right and make a decision that you're going to find a way to get ahead and to find solutions, right? Because it's easy to say, well, I would love to make passive income. I would love to be able to invest in real estate. I would love to be able to invest in these digital assets or anything else, but I don't have the money, and then just stay there.
Right.
But it starts with creating that mindset that strips away those limiting beliefs so that you can find the solutions, because if you focus on the solutions, I promise they're out there. And so that's really literally what you offer to your people. And so if someone who's watching this and they're interested in finding out more about this and they want to reach out to you, where can they find you?
Yeah, obviously. So we have a Facebook community with 500 members, so they can get added to the Facebook group. Moreover, I also have Instagram, Mr. Fundable, so they can look me up on Instagram and they can send me a message. Besides that, we have a website. It's called fundingwithskillkit.com/welcome. So they can also check out the website. Other than that, I'm completely active on all the platforms where they can actually find me, interact with me. I'm pretty open-minded. I love solving problems, so I would like to understand what problems they're facing and then point them into the right direction.
Yeah, and that's one of the things I liked about that you are accessible, because sometimes you find someone online and you don't know if they're a real person or not. And that was one of the first things that I did. I mean, I think I spoke with one of your reps initially, and I think on the second or third call, I was talking to you directly, and it was, you know, Zoom, you know, but it was face to face, and we were able to, okay, this is a real person. This is, you know, because obviously we're talking about personal information, credit reports, and financials, and that kind of thing. And so, you know, it was a great experience, and I recommend anybody else to have it. And like I said, I've already recommended you to a few of my business partners, some colleagues, and now I'm going to start, you know, referring my investor community to you guys, because I think it's a huge value. So, man, thank you for coming all the way from California down to South Florida to sit here with me in person. And I'm very excited about some of the prospects, you know, collaborations we have coming up in the future.
Of course, man. So, pleasure to have you, man.
Likewise.
I appreciate it.
Thank you. All right, so, you know, for my Investor Den community out there, if you're interested in finding out more about how you can get funded, how you can get access to these unsecured lines of credit that you can then turn around and use in your business, in your investments, in you know, any aspect that's going to yield you a return, then all you have to do is simply just click on the link below, and you'll get direct access through me and to Rishi and his team, and all I can say about that is that they're amazing, they're great, and they follow through, and they do what they say they're going to do. So I highly recommend it. Click on the link below somewhere in the bottom of this video, and I'll see you guys next time.